Welcome to the Real Estate Investing Club. This is the place everyday real estate investors gather to share their best stories, biggest insights, and favorite tactics to grow a portfolio of cash-flowing properties in today's market. Here's your host, Gabe Peterson.
All right. We are back with another episode of the Real Estate Investing Club. Today we have Mark Kappelman with us from realestateaccounting.co. Today is a unique episode because we're going to go into the thing that I struggle with the most, which is the accounting side of real estate. You know, we all have our strengths and weaknesses, and we always say on this podcast, you need to focus on your strengths. If accounting is not your strength, which it's not the strength for a lot of people, you got to bring somebody in there to help you out. And so Mark has created a company to specialize in that. And so I am super excited. Mark, thank you very much for hopping on the show.
My pleasure. Thanks for having me, Gabe. Excited.
Absolutely. We were just talking about this. Mark's in Chicago. I'm in Seattle. We just had our beautiful sunny day. In fact, the last couple of episodes, I was talking about how beautiful it was here in Seattle. Well, now it is rainy and disgusting. Mark's in Chicago, and it is beautiful and sunny. So we've kind of swapped weather there.
Absolutely. That's why I'm smiling so much. That in the show, of course, but man, it's nice and sunny out.
That dopamine from the sun is for real.
Yeah, exactly.
All right, Mark, I told you before we got on here, we like to start with stories. We like to hear how people got to where they are. So why don't you take us back to the beginning of your story? How'd you get started in real estate?
Yeah, so I grew up in South Dakota, went to college at Arizona State, didn't know what I wanted to major in. I got told, hey, if you don't know what you're doing, but you want to be in business, get your accounting degree because it's the language of business, quote unquote. And I thought, okay, sounds good. You know, I'd come out with a CPA. So I did that. Thought I'd tell the fast version here. Did that for about 7 years. But about 4 years into that, I just got into real estate. I got interested in real estate, read a couple books.
Rich Dad, Poor Dad?
Rich Dad, Poor Dad. It is so cliche, but it's so true. There's a line in that book says, why do you want to climb the corporate ladder when you can own the ladder? In that one sentence, I was like, oh, what am I doing? I thought I was on this path. So anyways, now I'm just totally want to buy real estate. Wasn't sure why. Then I started researching wealthy people. It seems like there's always real estate in that portfolio. Long story short, my wife and I, fast forward to 2013, we're watching all these flipping houses shows. We're like, we can do this. And we flipped a house. And, you know, we bought it for 120, I think put in 60 or 70 and sold it for 280. And for a couple accountants, my wife is actually a CPA. For a couple accountants, it was just like, oh my gosh, that was crazy. And we did that all on our own. And that just completely set off this journey into real estate, which is, you know, fast forward, I guess 10 years later, we own 40 units, bunch of multifamily, you know, we're flipping houses. We built houses, we built condos, we've gut rehabbed and done the burst strategy on 11 unit buildings. So that's really how we got into it. But it was that one little flip on the northwest side of Chicago and started buying single family rentals and off to the races.
Nice, man. Yeah, it's always that first deal that people, you know, get their hands on and they see the check and they're like, holy shit, there really is something to this. Like, this will work.
Yeah. And I would just, one more anecdote, which is kind of fun, which is, you know, I was putting ads on Craigslist, trying to find deals. We're literally at a Bears game and I get a call and it was like this was a hoarder house. And she's just like, I'm ready to sell right now. And we literally left the Bears game, middle of the game, drove to that house and signed the contract.
There you go. That's dedication.
Yeah, on a Sunday. I mean, it was crazy. So I just remembered that. So
yeah,
cool story.
Fun.
Yeah.
Right on. Well, I mean, you got a lot of experience from there. You went on, you bought 40. It sounds like single family, multifamily, a bunch of units.
Yep.
But I want to not focus. I mean, your real estate experience is great, but you guys made a company on the accounting side of real estate. So I want to focus on that because you are the master there. You started realestateaccounting.co. When did that happen? Why did it happen? What kind of was the impetus for that?
Yeah. Well, I think, you know what, I'm glad we started with the investing experience because I think that's why REA exists. So it's a good segue. So
Yep.
2013, we started flipping houses. 2016, we buy our first multi-family, which was a 6-unit. At this point, I've left public accounting. I'm the head of finance at this tech startup in Chicago, which is awesome. But then, by day, I'm this finance guy. And by night and morning and weekend, I'm this real estate guy. And so we're flipping houses. We're gutting this apartment building. And then once you get into real estate, there's 100 different things. And it's a full-on business with marketing and acquisitions and accounting, the department of that business. And, now I'm reading all these different books, Michael Gerber's book, E-Myth. And he's just like, look, if outsource all the admin, focus on what you're good at, focus on sales, you can outsource this admin. And even being a CPA myself, and my wife, she's like, I don't want to do it. And I'm like, I just don't want to do the accounting. Like, I want to focus on, I was the acquisitions guy in fundraising. She was managing the projects. So we outsourced our own accounting 2 different times, and it just came back bad. They didn't understand R&M versus CapEx. They didn't even know what NOI was. I sent them a closing statement to record. And it's just because we were working with people that didn't know real estate.
Okay.
And booking a closing statement is not even an easy thing for certain accountants, but I'm like, they were lost. Yep. And so this was probably like 17, maybe 16. I can't remember exactly. And so then we started going, who are just accountants just focused on real estate, and couldn't find any. So I think maybe that's when the idea was born. Now then 2018 comes around. I'm thinking about now, I'm just like, you know what? I want to get out of this tech company. It's been great, but I want to kind of do something full time. And my best friend, who was my roommate in college, we actually went to elementary school together. Probably the most entrepreneurial guy I've never, ever met. He was selling Xboxes on Craigslist when we were in college, while the rest of us were working, part-time.
I had one of those friends too. Yeah.
Yeah. And he's that guy who's my now co-founder. He's like, man, let's do a business together. And I was like, oh, I'm thinking about taking this outsourced CFO consulting job, because that's what I was going to do. And he's like, let's start our own CFO consulting job. Why do you want to go work for some company? I'm like, truthfully, I don't really want that job, because it's like they're going to want CFO services are highly personalized, very technical. I'm like, if we were going to do something around that, I'd want it a little more like where we could scale something, and it's not requiring MBAs and super specific knowledge. I'm like, it'd probably be bookkeeping. Like, let's start a bookkeeping company. My prior company, which he'd been running for 15 years, I've been managing the accounting. We outsourced it. It's great. And I didn't even know that existed. And I was like, well, look, if we're going to do that, we should specialize in something, and it would be real estate, because the 2 things I know the best are real estate and accounting. And he's like, well, let's start an accounting bookkeeping company. And I'm like, yeah, I did have this problem. Like, I
like this guy's attitude already. He's just like, let's do it. Let's go.
Yeah, you'd love it. And so I said, look, I already had this problem. Like, and then he did the research, and he's like, look, I think there's an opportunity there. And that's how it started. We got a website up. We put some money in a bank account, seeded it pretty small, and then have scaled it up.
Nice, man. I love that.
Yeah.
And it totally makes sense. If you're going into finance, starting on the bookkeeping side and specializing in something like real estate. I haven't worked with a ton of accountants. So I didn't really know that lack of knowledge was a problem. Lack of real estate knowledge was a problem in accounting. I thought that was something that just all accountants would know, but it makes sense that if they haven't experienced it. Yeah. So that's kind of where my first question that comes to mind is, what is the difference between real estate accounting and accounting for something like a business?
Before we continue on with today's guest, I want to tell you guys about a community I'm launching on School to help investors like yourself grow your own portfolio. In this community, you'll get access to all the docs I use, all the systems I've built, everything I've used to grow my own portfolio, as well as instructions and guidance on how to get out there and find great deals, how to finance those deals, and then how to manage them for great returns. Since we're just launching it, the price will be set at a measly $20 per month, and whatever price you join at is the price you'll have for life. We will be increasing the price as the group grows, so if you're at all interested in growing your portfolio along other investors, now is the time to join. I will put the link somewhere in the bio or on our podcast website at therealestateinvestingclub.com. So if you are interested, head on over there. With that said, let's get back to the podcast.
Look, the number one thing is the software we're all using. So, if you're a small business, you 9 times out of 10, you use QuickBooks.
Yep.
Great software.
Well, I use QuickBooks for my real estate.
I'm sure you do. And look, it works for most people. It's super adaptable. You have one general ledger, and it's really easy to use. And Intuit is a Fortune 100 company or something. So they've built a great product. But if you want to get into property management and actual reporting with tenant ledgers and owner ledgers, then you need to now upgrade to Appfolio, Yardi, Buildium, Propertyware, Entrata, Rent Manager, Resman, on and on and on and on and on. And so they're very specific softwares. And even, myself, I graduated college in 06. I would say anybody that is my age or older that's a CPA has never logged into these softwares. And it's just not what you learn in college. You learn about one general ledger. Now we've got all these different owner and tenant ledger and security deposit transfers. And it's just different. I mean, it's no different than, hey, I work with a lawyer that knows IP law. And if you want to go into M&A law, it's like Chinese versus English. These are, yes, there's a legal foundation and that you got to go to a court and do stuff like that, but it's completely night and day different.
Yeah. Well, yeah. And even with QuickBooks, getting the right reports to come out of QuickBooks has been a real struggle for me, just because they don't have the reports that I just want to see on a monthly basis. And even trying to get them when you have multiple properties, trying to get it split out by asset type or by asset type and then by location is a nightmare.
It's because they're not built for that. Trust me, I built my accounting business was all in QuickBooks, and I literally moved to Buildium this year because I couldn't run a balance sheet out of QuickBooks. You can run a P&L, you can use the classes and location, but those are built for like P&Ls and they're not built. I mean, it's just totally different. Like once you get a certain level, even my small portfolio, 40 units, felt like I had to move up to Buildium.
Yep.
Or something of that nature. I'm not endorsing Buildium, just something that was property management specific.
Yep. Yeah, we use Appfolio now, which is great. I mean, I use QuickBooks as well. It's I kind of have a Frankenstein system with Appfolio, QuickBooks, and all these different things. But having
very common.
What's that?
Very common.
Yeah. So I want to kind of take questions in two directions. One, the kind of best practices when it comes to the operations side of being the owner. How can you facilitate good bookkeeping? What do you need to do as the owner? And then also I want to talk about reporting and how to generate good reports, what reports we should be looking at. So let's start on the reporting side. What are the top 3 reports that you recommend most investors should be reviewing every month, should be creating in their systems every month to get a good grasp on how their portfolio is working?
Yeah, I think, and just one thing to note is about 70% of our business is owner operators. And I think that's just a function of like, it's a lot more specific and a lot more technical. And because we're owner operators and accountants, we bring that kind of unique value to the table. And we speak the language of these folks when we're talking about closing statements and stuff like that. In terms of the reporting side, the reason that's important is from an owner operator's perspective, budget to actual. So whether you're the one, if you just own the assets, and you hire a third party, or you both own and manage, you got to be looking at budget to actual. I think our clients that are the most sophisticated all run the budget to actual report each month. We have a meeting to discuss it. And that's where it's just like, why is water so high? If you have no baseline for any of your costs, then how do you know if anything's out of whack?
Yeah.
Yes, everybody's always focused on revenue, and revenue kind of cures all, but like there's so many ways to optimize.
Well, NOI is the number that you want.
That is the number
aiming for. And if you're over budget, then your NOI is going down. It doesn't matter what your revenue is doing. If your revenue is going up, but your expenses are exceeding the their mark and they're way going out of whack, then your NOI is going to be going down, even if your revenue has been going up. So
And that's exactly right. And the second piece of it is because we have so many owner operator clients, you got to remember, like, the best owner operators are reporting back to their LPs consistently, whether that's monthly or quarterly, and telling them, all right, we raised money from you and here's what we said we were going to do. Here's how we're doing. But that how we said we're going to do needs to get into the system on a monthly basis so that we can compare to it. And plus, it just makes it so much simpler when you're the operator, when you want to send out that monthly report to say, hey, guys or gals, here's how things are going. Here's leasing, and see attached the P&L, which shows budget to actual. It's a stock report right outside of the system. If you don't have that budget in there, now we're exporting it to Excel. It's just, at this point, software is so good that you shouldn't be doing things in Excel. I mean, we all still do a little bit, but budget to actual, I think, is the number one. Number two, look, revenue, again, cures all, is delinquency report. So again, whether you own or if your property is being managed by a third party, you can get weekly updates from them on delinquency, but at minimum, you got to be looking at that to say who isn't paying. And, obviously, bad tenants are one of the biggest costs in this business. So you got to get out in front of that really, really quickly. But I think those two reports, I know you asked for a third, but to me, it's really those two would probably be the most important.
Yeah. Yeah. The budget to actual, that's a good call out. And especially when the first step in that is actually having a budget.
Having a budget.
Yeah. Having
That's
a budget.
That's exactly right. Which is a good forcing mechanism in and of itself. Like, it forces you to actually sit down. And if you raised money from investors, you already have it. Unless you raised without a budget, which that would be shocking. But I hear you. You're exactly right.
Yeah. And that is so important. And lessons that I've learned in my own experience is to have your budget. And then for things like property maintenance, I always give a buffer in there for, when you're budgeting, make sure that you err on the side of things going wrong, because generally things do go wrong. So when you have that budget in there and you know that this is the money that you are setting aside to deal with these maintenance issues that are going to be coming up, then you stick to that budget, then you're going to be in a safer position than if you were just kind of going willy-nilly and you were spending money and taking it out and distributing it without having something in the reserve. So I like budget to actual is great. And I like that it starts with the budget. And it's one of the harder things if you're not good at accounting is coming up with that budget. So now let's talk about best practices for kind of the operations side and how to, the question I'm really trying to ask is like how to make it, I'm not quite sure what I'm trying to ask is how to make it appropriate for the accountants to create their reports, how to get systems in place to kind of optimize the reporting side of things, the accounting side of things.
Yeah. And I think kind of what you're going at is like, look, I'm an owner operator, or I'm a property manager, or real estate investor. How do I help the accountants if we hired somebody like ourselves, or even if you hired somebody in-house? I think, look, there's a couple different things. One, you were kind of talking about the Frankenstein approach to your accounting system, which is, we've all been there. And I would just say, like, look, just like the foundation of the house, like, you can have a beautiful house, but if you foundation sucks, forget it, right? You're going to have issues forever. The drywall is going to crack. All sorts of things are going to happen. And so I always just say, number one is the chart of accounts. Like, in the accounting world, the chart of accounts is like, you got to set up the right set of chart of accounts. And chart of accounts is like, how much detail are we going into R&M? Are we just doing R&M general, or are we doing R&M electric, gas, water, and boom, 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 all the way down the line. And I think if you have the right set of chart of accounts and those then match kind of the way you budgeted, it's a lot easier to understand your numbers just as the owner and the accountant. Like, the mistake I made personally, because I'm a CPA, is when we started doing real estate. I mean, we were tracking everything from paint labor to paint material. And all of a sudden I'd run a report and it was 5 pages long. And it was just like, this isn't even helpful. Yeah. Right. And now I'm to the point where, like, just give me capital expenditures. And then, you can drill down and say, well, how much did we spend on the electrician and the plumber? But like, there's just fine lines. So I just think step number one is working with your accountant to be like, these are the things I want to capture. Let's make that happen in the accounting system.
Yeah.
This is the level of detail I want and need. Let's make that happen. And, there's just a fine line. So that's hugely important. Step two, I'd say, just like from a bank account perspective, if you've got 6 deals going on and it's 6 different LLCs, then absolutely you need 6 bank accounts. That's a legal thing. But just kind of separating that out. If you're a property manager and you manage 1,000 doors, you don't own them, but you're managing them on behalf of other people, it's okay to have one bank account on the operation side, but at minimum have a security deposit account. I think where people get into trouble, whereas you were kind of getting at this with reserves, people mix their operating cash and their security deposit cash. And then when you see that bank balance, you assume that if you have $50,000 security deposit liability, you assume that you got an extra $50K in your bank account because you're just pulling the account from Chase.
Yeah.
Right. And it's no different than like a checking and savings in our personal lives. And so those two just like operationally make things so much easier. And then, the hardest thing about accounting, in my opinion, or one of the hardest, is just keeping up with it.
Yeah.
Keeping up with it and keeping up with it. And most people get behind. And then when you're playing catch up and you're trying to remember transactions from a month ago, let alone a year ago, you have no clue.
Yeah.
And if your data is that stale, then you can't even use the data to make decisions. Yeah. Everybody's like, I want the data to make the decisions now. Well, if we haven't updated the accounting in a year, forget about it. You're kind of shooting from the hip.
Yeah. Yeah. And that's kind of a practice that I've gotten a lot better at, is whenever we make an expense for any of the properties, I automatically email our bookkeeper and it's just like, hey, this is what we bought. This is what it was for. This is what property it went to, all that kind of stuff. So they know exactly what to be looking at and where to put it in QuickBooks.
Yeah. And that's exactly why, at least, us as a company, we're reconciling the banks at minimum twice a month. We do a soft rec in the middle of the month so that if there's any bank activity that you haven't told us about, we're going to come back and go, Gabe, what's this $46? And you're like, oh crap, I forgot to tell you about that. Right. Yep. It's just like that check and balances, but we are just 100% focused on your accounting. So you, the operator, can go buy more buildings or go raise capital or go get more doors to manage. It's no different than that E-Myth concept I was talking about before. It just happens to be our, number one focus is accounting, which then, benefits our clients.
Yep. I love it. All right. Before we move on to the quick question round, I want to ask you, before the call, we were talking about your virtual property management assistant kind of line that you opened up these recently. So tell me about that. What does it do and who benefits from it?
Yeah, so we call it the VPMA, Virtual Property Management Assistant. And again, what I love about this is that it came out of 2 areas: 1, client feedback, and 2, the same business problem that we had, no different than the accounting thing. So I mentioned that we own and manage 30 units in Chicago. And for the longest time, it's just been me and a maintenance guy, which I thought, was fine as we were getting smaller. And then all of a sudden, you got 15 units listed for rent, and all of a sudden it's just crazy, right? And you got to post the listings. So there's lease. The way we think about it is leasing, maintenance, and renewals. Those are the 3 big buckets. So within leasing, you got to list it. You got to review applications. You got to do showings. You got to negotiate with the tenant. Maintenance, maintenance is maintenance. Respond quickly, get it done, have your trusted vendors, keep the tenant happy. And then turnovers, you got the renewal process. Hey, do you want to renew? Here's the renewal offer. So I was doing so many tasks that I was just like, these are low value tasks that I should not be doing when I've got a million other things going on in my life, not to mention the real estate accounting business. And so we hired somebody to just be my assistant and be that assistant property management. And I can't tell you how much pressure it's taken off my plate. And then, so that was step 1. Step 2 is our clients start coming to us. So of course, our accounting clients say, hey, do you have anybody that can respond to tenant questions? What about onboarding a new owner? Hey, can you coordinate maintenance? So it's now we have our own problem. Now we're hearing it from clients. And it's just enough for us to say, wow, we can provide more value to our clients because, again, we know this business. We know it super well, and we've had these problems. And that's why we're excited really to be offering this to clients now.
Nice. Yeah. It's definitely a needed offering because property management is the hardest part, in my opinion, of real estate.
Yeah.
It's the part that definitely, and it's hard in terms of the time that it takes from you. And so it's something that if you're in real estate, if you're investing, if you're trying to do more deals, absolutely you want to outsource this. And I would say even outsource accounting, unless you're an accountant. But even if you are an accountant, you'll want to outsource it
Yeah, I
just because,
outsourced it. Yeah. It's
yeah,
not the highest value use of your
it
time.
takes too much time. So
One thing, Gabe, if I could just make one quick point, which is you can, one analogy I want to make is if you have an accounting problem in real estate, you can go hire an accountant or you can go hire a real estate accountant. And I would argue you should hire the real estate accountant that knows what they're doing and knows all the terminology. If you have a virtual assistant need, you could go hire a general virtual assistant, or you can hire a virtual assistant that understands real estate and knows what a turnover is and knows what an application review and how to list something on Zillow. So it's just, that's why to us, it's like you can go general or you can go specific. And that's why we think, we have a competitive advantage here because we just know and have these same issues and we already know all the softwares and etc.
yep, specialization is key. I love it.
Yeah.
All right, man. That wraps up the first section. I'm going to move us to the quick question round. Are you ready?
Cool. Absolutely.
Let's do it. Starts with books or any form of education. I need 2 recommendations: one for general life wisdom, one for real estate.
Yeah, I'm general life wisdom. Right now I'm reading the Almanac of Naval.
I just read that actually. That's a really good book.
Oh my gosh. There is so much wisdom in there. That guy is amazing. So I'm loving that. Real estate book, if you're just starting out, I gotta go Rich Dad Poor Dad. It's just so good. He breaks it down really simply. And then one more bonus I'm going to say is I read right before I'm reading Naval right now is I read the book Who Not How,
yep.
which is phenomenal for any business owner.
Cool. I love it. Good recommendations. Yeah, I just finished that Naval book. It was I really liked it. One of my favorite books is Meditations by Marcus Aurelius, and I love that book.
I haven't read that.
It's great because it's just little nuggets of wisdom, a whole bunch of them, one after another. I love those kind of books because you can just pick them up on the toilet, just for anywhere. 5 minutes on a Friday afternoon, get some good wisdom and then put it down. So
yeah.
All right. Next question is for your younger self. So let's go back to the Mark who was just starting out after he got a CPA, just starting out in finance. Go to him, look him in the eye, give him one piece of advice moving forward.
My advice would have been house hack, buy a 3 flat or a 2 flat right in the beginning, get an FHA loan where you're only putting 3 to 5% down and fix up the other couple units and start renting them out.
There you go. And I'm going to put that in the same vein as I wish I would have get started earlier. So whoever is keeping count out there, you can add another notch to that category because every single investor who comes on here says they wish they would have started earlier. So if you're out there, you haven't gotten started yet, go out there, get started, get a deal done. Moves us on to the next question. This is for your business. So this is a good question for you. The first 3 positions we hire are the crucial ones. Those are the ones that kind of set the foundation for your company. So what are the first 3 positions you hired for? And would you do it differently if you did it again today?
Yeah, we hired, the first 50, 60, 70 hires were all accountants. I was the accountant for the longest time. And I guess maybe once we scaled up, we have a director of client operations. So just think an operations person. Critical, guy's amazing. The next one was our VP of accounting. So I was overseeing and had so many people reporting to me. And so I guess whatever your core product is, a team lead that owns it. And the last thing is sales. And not necessarily in those orders, but that was the next one where my co-founder and I were finding ourselves doing all the sales and not having any time to just think. That Naval book, he's got a comment in that book that says, you should have 2 hours of thinking time on your calendar every day. And I actually did this the first week. This week, I put an hour and a half block every single day on just thinking time, because then it doesn't allow, it allows people to not book over that because my team can see when I'm busy or not. But I think, sales, operations, and then somebody overseeing your core product.
Yep.
It took us a while to get there. Don't get me wrong, but like that was what we did.
Yeah, and I totally agree with the having time to think notion, because if you don't have that, then you just get kind of stuck in the hamster wheel and your brain doesn't come up with solutions. It's just it sees fire after fire and you keep putting out fire after fire and you never really come up with a good solution to prevent the fires from happening in the first place. So
yeah, completely. My co-founder is like, look at your calendar. It's crazy. All you're doing is just back to back to back to back to back meetings. Like, I love to join the accounting meetings, but if I join every client's accounting meeting, I have no time to be like, how do we get better? How can we make the product better? Who can I hire to get better people to get a better service? I mean, sometimes it feels counterintuitive, but it's like once you actually start thinking that way, it's a game changer.
Yep. All right. Next question is about the US. It's a big place, a lot of opportunity out there. Give me one metro you're most excited about investing in today.
Tampa, mainly because, I'm a big fan of just knowing your backyards, and Chicago's been my backyard. So I would have just said Chicago, but Tampa, because I just love the fact that, buying real estate in both places. Closing statement in Chicago is like 4 pages long, and a closing statement in Florida is like 1 page long, because there's just so much less bureaucracy. The sun's great. All the other reasons Florida's great. We already own some Airbnbs and some developments down there. So it's kind of my second backyard. I got to go with Tampa.
Nice. I like it. All right. The next one is about finding deals. Every real estate transaction starts with finding the deal in the first place. So what's your favorite way to find good deals?
My favorite way was literally going on a bike, riding neighborhoods, and taking down addresses that looked interesting. And Is it the most scalable thing? Absolutely not. But the cool thing is you can stop, you can go backwards, you can do all sorts of things. You get to see the houses that are vacant. You get to see the ones that have deferred maintenance. You get to see the multifamily buildings that are totally just like in shambles. You can see the property manager's phone number on the building. I've tried it in a car. You got to stop. And in Chicago, there's parking nowhere. So you're constantly trying to find parking. Maybe this, works better in dense metro areas. But literally, I'd get on my bike and found deals that way.
Nice. Hey, man, and you're getting exercise, so that's a win.
And you're getting exercise. That's right.
All right. Second to last question is about mentors. None of us are islands. We all stand on the shoulders of giants. So who is one mentor who has contributed significantly to your career today?
Mentor. Gosh, I don't know that I have one mentor like that. My dad, inspired me, and my parents inspired me. My grandpa inspired me. I think for me, it's kind of virtual mentors. I'm inspired by people like Richard Branson, because it just seems like not only is he successful financially, but he just seems like he's
having a good time, right?
And I think he doesn't take himself too seriously. From what outside looking in, I don't know him. But I think if there's anybody I've tried to emulate, and I've read all his books, it's got to be him.
Yeah. Yeah. He was my, I guess, entrepreneur hero, if you want to say that. The guy that I was looking up to when I was, just getting started, just because he looks like he's having a good time. He seems like he has a good value set, and he's kicking ass. So love to hear that. All right. That leads us to the very last question. This is for the listeners. I'm sure people want to reach out, learn about realestateaccounting.co, how they can get involved, and ask you questions. So what's the best way to reach out and get in contact with you?
Yeah, www.rea.co, not .com, but .co. That's the best way to, schedule a call. We own the URL realestateaccounting.co, but it was such a long email that we went and bought rea.co. So either one works. And then LinkedIn, I'm probably most active and agile from a business perspective there. So those two.
Cool, man. Speaking of long emails, I absolutely hate my email because it's the realestateInvestingClub.com. And I've been looking for a new URL just so I could shorten that thing up. Because when you try to tell people the email address. It's just a nightmare, but right on. I love that. rea.co, Mark at rea.co. I'm going to put that in the show notes. If you guys want to reach out to Mark, just click a little more in the description. It'll pull down the full description. In there, you can find Mark's URLs. All right, man, that wraps it up. Thank you very much for hopping on the show.
Yeah, my pleasure. I hope I was able to give some value.
Yeah, absolutely. For everybody who's here with us today, thank you guys for showing up. You are the reason we do this. So if you guys have any questions whatsoever, reach out to me, Gabe at therealestateinvestingclub.com. And if you guys want to support the show, all we ask is give us a like, subscribe, share, all that jazz. Other than that, I hope you guys have a great week. Keep rocking real estate, and I look forward to seeing you on the next episode. All right, before I officially sign off, I have a quick announcement to make. If you're interested in becoming a passive investor in one of my deals, my own company, Kaizen Properties, is looking for capital partners for our upcoming projects. We invest in what are known as recession-resistant assets, mainly self-storage facilities, mobile home and RV parks, and industrial properties. If you're interested in investing and would like to learn a little bit more about my company, our investing criteria, and some of the previous projects we've done, go to the Real Estate Investing Club podcast at therealestateinvestingclub.com and scroll all the way down to the bottom of the page. Click on the Invest With Us button. That'll pop up the investor form. Fill that out, and we will reach back out to you as soon as we can. Or if you prefer a little bit more of a personal touch, you can reach out to me at Gabe at therealestateinvestingclub.com. So really, that is it. Again, it was a pleasure hanging out with you guys during this episode, and I look forward to seeing you on the next episode.